A very good morning to all the participants of this webinar. And I'm Arvind Mishra, Deputy Director of DTRTI, Lucknow, welcoming you to another topic of our webinar series. And today we'll be discussing concept and accounting of depreciation. And we propose to do that in course of 2 or 3 sessions. And in this unit on depreciation accounting, we'll try to understand the meaning and nature of what depreciation is to start with, and then we'll go on to understand how to determine the amount of depreciation if we have the total value of property, plant, and equipment, and if we have with us the useful life that it has. So with the help of the total value and useful life, how do we determine the amount of depreciation? We'll also learn different methods of depreciation and the comparative advantages and disadvantages of the methods. We'll also know how to calculate the amount of profit or loss which results from the sale or the disposal of the property, plant, or equipment. We'll also learn the accounting treatment for when we make the change in the method of depreciation from straight line method to reducing balance method. How do we do the accounting treatment of any such change in the method of accounting treatment when we move from method of depreciation from straight line method to the reducing balance method. And of course, we'll also familiarize ourselves with how do we do the accounting for change in the estimated useful life of the property, plant, or equipment, and any change in the residual value. So if there is a change in residual value or the estimated useful life of any property, plant, and equipment, what is the accounting treatment that is to be done in respect of that change? The estimated useful life means what is our estimate that how much is the useful life of that particular plant, property, and equipment left at that point of time. And once it has completed its useful life, what is the value that it can fetch when we sell it in the market? That is the residual value. So as an overview of this unit, we'll be studying the objectives of why depreciation is provided for in the accounts. So basically there are 4 objectives due to which the depreciation is provided. First is that we have to ascertain the true result of our business operations. And if our assets are depreciating in value, we must allow for such reduction in value in our accounts. Otherwise, we won't get the true results of the operations, as well as the true and fair view of the financial position. We provide depreciation also to accumulate the funds for the replacement of assets. So as our assets are being used up, we know that after a certain period of time, we'll have to sell them and buy new assets. So we'll have to replace the assets, the older assets, with the new ones. And therefore, we need to have funds for that. So it is always better to start accumulating the funds as we are making profits, so that when the time comes, we have adequate funds to replace the worn out assets or those assets which have lived their life already. So we provide depreciation, and we make provisions in our account so that we accumulate the funds for the replacement of the assets when they complete their life. And of course, depreciation is provided to ascertain the correct cost of production also. Otherwise, if we get a wrong idea about our cost of production, having not applied depreciation, we may think that our cost of production is very less. Therefore, it will not give a true picture of the cost that we are incurring of the production. So there are three types of true pictures. One is the results of the operations. Then we have the view of the financial position. Results means profit or loss. View of the financial position means how many assets and how many liabilities do we have. And the cost of production is necessary to understand that how do we value our inventories. And besides, cost of production is also important to know at what price we should be able to sell our products so that we get adequate margin and we are able to be competitive in the market. Now, as far as factors which affect the depreciation that we have to allow. So first thing is the cost of the asset, of course. The more the cost, the more the depreciation. And cost is the most important criteria that affects the amount of depreciation. Depreciation is also affected by what is our expectation or what is our estimate of how much is the useful life of that particular asset in the given prevailing circumstances. And of course, another aspect which affects depreciation amount that we are going to allow in our accounts is the estimate of a residual value. Once the asset has completed its life, what is the residual value? What is the remaining value which it can fetch in the market by selling it? So first, in the introduction part, we'll understand the concept of depreciation. You know, any property, plant or equipment that we are using, they are tangible items. Tangible means something which we can know about or feel with the help of our senses. And these are held for use in production or supply of goods or services, or we rent them out, or we are using these for administrative purposes like fax machines, etc., photostat machines, etc. And they are expected to be used during more than a period of 12 months. Because if they are expected to be used for less than 12 months, we'll provide the entire cost of that property, plant or equipment in that year itself as an expenditure. But if they are expected to be used for more than a period of 12 months, then only a concept of depreciation or the point of depreciation, of allowing depreciation, would arise. Now, in common language or in common parlance, these are called fixed assets, the property, plant and equipment. Now, whenever we purchase fixed assets, we are recording that in the books of accounts at original cost or original purchase cost or original acquisition cost. But fixed assets will be used to earn income or revenues, not for just one accounting period in future, but they will be used for number of accounting periods. And while they are being used for a number of accounting periods, the acquisition cost that would be there, that would be mentioned in the balance sheet, will be written there in the balance sheet until the time that the fixed asset is sold or discarded. Till that time, if you purchase it for, let's say, 100 rupees, it will be mentioned that the cost was 100 rupees. So therefore, but we are actually using that asset to generate the revenue. And necessary that acquisition cost that we had borne will be allocated as an expenditure in each of the accounting period in which the asset is utilized. Because we are going to utilize that asset over a period of time, not just in 1 year itself. So why don't we amortize the acquisition cost during the period for which it is expected to be utilized for the purpose of the business. The utilization for the purpose of the business is important because unless and until the asset is utilized for the purpose of the business, it will not suffer from wear and tear, and therefore a different treatment may be required. The amount of value of the fixed assets which are allocated to every year in such manner that they are allocated to respective accounting periods, different years, different financial years. The manner or the amount of the allocation every year is called depreciation. Now we know that the value of the assets will decrease over a period of time as the time passes. Although assets like land may increase in value, but property, plant and equipment, other properties, plant and equipment, as they are used in the course of the business, their value will reduce. The price that they can fetch in the market will reduce. And this reduction takes place due to the reason that, one, the plant or equipment or property is suffering from wear and tear due to it's being used in the business. Of course, if it is not being used in the business, even by the passing of the time, the value may reduce because it is becoming older and older. The third reason why the value may reduce is that technology may change and our machine may belong to an older technology, and therefore it will become obsolete. It will no longer be required by the market to the extent that it was found useful earlier, because new technological changes have happened and they have led to preference for different other machines or equipment as compared to our equipment. So these are the three reasons. Another reason is that the market value, the value in the market may decrease of that particular item. And the value may also decrease where if we have certain mines or natural reserves, then they may get depleted, and therefore they, as and when we are using them, and therefore their value will decrease. If it is a mine, it has got more mineral now, and as I'm using the mineral, the mine is getting depleted of the mineral, and therefore it is losing its value gradually. So it is important to account for the value of the portion of the property, plant and equipment which is already utilized for generating the revenue during an accounting year. So as we are using the machinery, plant or equipment or the property, a part of its value is getting utilized every year, we can say, and we need to account for that utilization. Now this portion that we are allocating to every accounting year as the utilized amount of the cost of acquisition is called depreciation. When we look at the Schedule 2 under Companies Act 2013, depreciation has been defined as the systematic allocation of the depreciable amount, the amount by which it is depreciable over its useful life. So the definition is almost similar to what we have understood so far. The depreciable amount of an asset is the cost of an asset or other amount substituted for the cost less its residual value. So what is the depreciable amount? The total depreciable amount is the cost for which we, or if we substitute that for the cost, in case it didn't cost us anything, we can substitute a certain amount as the cost and then reduce the residual value. Residual value means once it finishes its life, what will be the remaining value of that asset? So we have to reduce from the cost the residual value, and that gives us the depreciable amount of the asset over the useful life. So therefore, we'll have to divide it by the useful life of the asset. The useful life of the asset is the period over which this asset will be expected to be available for use by any entity, or the production units, or the number of production units for which it is expected to be, or the number of production units that are expected to be obtained from the asset by the entity. So useful life can be seen in terms of the period for which it can be used, or it can be seen in terms of the production units which are expected to be obtained from the asset by the entity or by the business. Now, thus we can say that there are three important factors for computing depreciation. When we want to compute depreciation, there are three factors which will affect the depreciation that we will have to provide in our books of accounts. And these three factors will be: what is the estimated useful life of the asset at the point of time when we are calculating the depreciation to be allowed, what is the cost of the asset for us, and what is the value or the remaining value or the residual value of the asset when its estimated useful life has come to an end. Now, this residual value is also an estimated amount. An estimated useful life is also an estimated amount, because all these things will in reality not depend on our estimate. They will roll out as during the course of time, but we have no choice but to make an estimate of the useful life and the estimate of the residual value, because we have to start providing depreciation right from the beginning when this property, plant or equipment is put to use for the purpose of the business. Now, depreciation of an asset begins the very moment it is available for use, that is, when it is in the location and the condition. Available for use means it has been installed, it has been brought to the location where it is supposed to be installed. It is in that condition which is necessary for it to be capable of operating in the manner which the management intends to use it for, or use it in the manner in which it is expected to be used. And thus, it is not necessary that asset must be used to be depreciated. Asset, even if it is not used, it will depreciate. Certainly, depreciate means it will lose its value, even by standing in one place, because of the reasons that we have seen earlier. It may be obsolescence, or it may be some other reason also, due to which, even by standing in one place, as the machine gets older and older, even if it is not being used, its value is depreciating, its residual value is also reducing. So even if wear and tear is not happening, some kind of reduction of the material will also happen. Maybe rusting may happen, or any kind of machine which is kept at a place without being used, even if it is new, it will suddenly lose its capability also to be used in the future. Because anything which was new at the point of time when it was purchased And as it gets older, even without use also, it can lose its capacity to be used. And therefore, for different reasons, any machine which is not being put to use also will depreciate. Of course, for the income tax purpose, it is necessary that the machine should be used for claiming the depreciation when we do a computation of the total income. But as far as accounting is concerned, accounting will take into consideration the real situation where depreciation is happening even when the machinery or the asset is not put to use by the business. So therefore, if we were to be asked whether depreciation happens even when the machine is not being used, we will say yes, it does. It is being used. There is even if it is not being used, there could be some wear and tear. Wearing out may happen even by standing. So there is a decrease in the value of assets due to normal wear and tear, even when the assets are not physically used. And therefore, value of the wear and tear should be estimated and accounted for even if the machinery is not put to use for the purpose of the business. Now, this is for the purpose of making the realistic and true and fair accounts of the business. Here we are not computing the income tax. So, while accounting, the income tax rules will not apply. While doing the accounting, the calculation of depreciation is not to be done as per Section 32 of the Income Tax Act. It has to be done as per the guidelines which are issued by the concerned bodies which have the power to issue guidelines as to how the accounting has to be done, inform the accounting standards. Now, the depreciation is allocated in such a manner to every year so that a fair proportion of the depreciable amount, as we have seen, is the cost minus the residual value. We want that a fair proportion of that depreciable amount should be allocated to each accounting year during the expected useful life of the asset. So the allocation has to be done so that this proportion which is allocated is a fair proportion. Now, as the assets lose in value, the loss in the value of the assets which are employed for carrying on a business is an essential element of the business expenditure, because as the business is happening, apart from the expenditure, the value of the assets which is lost is also a part of the business expenditure, and therefore it is necessary to calculate the amount of such loss, and it is also necessary to make a provision so that we accumulate a certain amount of profit to replace those assets, and therefore even to arrive at the profit and loss made by the business, we need to provide for the depreciation or the amount of loss on account of depreciation, or the loss on account of the loss in the value of assets. So in other words, we have to write off the cost of an asset or amortize the cost of an asset used for the purpose of business over its economic life or over its physical life as it is being put to use in the business, and therefore how much amount will be written off every year will have to be estimated. A point to remember here is that usually at the end of the economic life of an asset, still the asset has some value, either as scrap or otherwise, which is called the residual value. Now the amount to be written off every year should be as such, which should reduce the book value of the asset at the end of its economic life to its estimated scrap value. So we are not going to reduce the book value of the asset to zero. The book value will reduce up to the estimated scrap value, because once the machine goes out of use and it has expired its useful life, It can be sold as scrap also. So when the machine goes out of use, then what we have to do is that we have to buy a new machine instead. So it is a very important and pertinent question that once an older machine expires its life, then what is the price likely for its replacement at the time it needs to be replaced? So this factor is also important, that what is the replacement cost of that machine. So some people advocate that the calculation of depreciation should also contain a calculation on the basis of the replacement price, and we must take the replacement price into consideration while calculating the amount to be written off rather than the cost of the asset. There are some proponents or advocates of this view also. Now, accounting standards as well as the Companies Act 2013 make it mandatory that depreciation should be charged on a component basis. Component means each part of an item of property, plant, and equipment which has a certain cost that is significant in relation to the total cost of the item should be depreciated separately. It means that every part of the item, every component of the property, plant, or equipment with a cost, with having a significant cost. A component not having an insignificant cost, but every component having a significant cost in relation to the total cost of the item must be depreciated separately. If a component can be identified and that component cost is significant cost in relation to total cost, then that component should be depreciated separately. So any enterprise should allocate that amount that it initially recognized in respect of an item of property, plant, and equipment to its significant parts components, and it should depreciate each such part. So first thing is to recognize the significant parts or the significant components, and then each such part or each such component should be separately depreciated based on whatever is the useful life and whatever is the residual value of each particular component. Now, example of this is that aircraft is a classic example. Now, the body of the aircraft, the engines of the aircraft, and the interiors of the aircraft, they are all such components. They have different individual useful lives of their own. If the life of the airframe, the life of the airframe out of the three engines, interiors, and airframe, it has the longest life. The life of the airframe is the longest among the three, and that is taken as the life of the aircraft because the airframe life is the longest among the airframe, engine, and interiors. So the airframe life is taken as the life of the aircraft. So it is important that the other two major components, that is the engine and the interiors, should be depreciated over their own respective useful life, and not over the life of the airframe, because airframe life may be much more compared to the life of the engine or to the life of the interiors. So we must identify suitable components of any property, plant, and equipment, and based on the fact whether it has a different useful life and whether that is a separate component that can be identified as a separate piece of component that needs to be depreciated. Now, other components in the aircraft which will have smaller or lower value, will also be there, which will require replacement very frequently, or which will require replacement at a very short duration. They may be depreciated over the useful life of the airframe, and their frequent replacement cost may be also charged to expense as and when it is incurred. So what is done is that when we buy very small components of small and low value, we just charge it to expense every year straight away, and do not calculate the useful life of those small components. But if there is a significant depreciation every year separately, and should be, although it is a part, it can be seen as an equipment which is part of the aircraft, but as far as depreciation is concerned, it is possible that it may have a different useful life. So obviously, the depreciation, as it is dependent upon the useful residual life also, it is necessary to take into account the fact that every significant component must be depreciated over its useful life. Now, it is important that a part of the property, plant, and equipment to be identified as a separate component should have two things. One is that it should have a significant cost when compared to the overall cost of the item. And secondly, its estimated useful life or depreciation method should be different from the rest of the parts of property, plant, and equipment. So based on these two factors, we identify the component which needs to be depreciated separately. The two components are that it should have its own significant cost when we compare its cost to the overall cost of the property, plant, or equipment. The second factor is that it should have its own estimated useful life. It should have its own depreciation method that can be used, which should be different from the rest of the parts of the property, plant, and equipment. Now, a significant part of an item may have a useful life of its own, and it may have a depreciation method of its own that is suitable to it. So, however, that it is also possible that some significant parts may have the same useful life and the same depreciation method as the other significant parts. So in that case, those all significant parts will be grouped into a block of assets in determining the depreciation charge, because wherever they can be blocked together or brought together, and that can also be done in order to facilitate the accounting process. So identification of a component which has to be depreciated is an important aspect before providing the depreciation. Now let us see what are the objectives, based on our study so far, what can we call as the objectives for providing depreciation. As we have already seen, depreciation is provided because we want to measure the income correctly. Secondly, we want to get to the true position statement of that particular business, and thirdly, we need funds for replacement of the assets. So therefore, we need to generate the adequate funds and to make provision for those funds every year, so that while the original fixed asset is being used over its useful life, before its useful life comes to an end, we should have enough funds to replace that particular asset, or to replace that asset with a newer, more technologically advanced asset. And finally, we need to know the estimate of the fair estimate of the cost of production. So because cost of production is necessary to understand the profit margin that we can get and the amount of profit that we can make in the business and the price that we can set for our sale without going into the loss and to maximize the profits. So this is the objective. And of course, we know that depreciation is an expenditure of the business, but it is a non-cash expenditure. And it is different from the normal expenditures like wages, rent, etc. And therefore, there is no cash outflow related to depreciation. Now, just by allowing depreciation, the funds are not created. Depreciation by itself does not create funds, and it merely draws attention to the fact that out of the gross revenue receipts, a certain amount should be retained for replacing the assets which are used for the carrying on of the operations of the business. But by providing depreciation itself, the funds will not get created. It will just give an indication as to what is our actual profits and what is the situation regarding the availability of the funds to replace the assets or to replace the older assets with much better assets. Now let's go to the factors which are useful in the measuring of the depreciation, which we have already seen. So it is the cost of the asset, the estimated useful life, and the estimated scrap value at the end of the useful life. So let us try and understand the factors which are necessary to account for while calculating the depreciation. So first factor is the cost of the depreciable assets. Cost of the depreciable asset is the money outlay or its equivalent when we acquire, install, and commission that depreciable asset. And it is also the cost incurred for additions or improvement to increase the efficiency of that depreciable asset. So there are two factors in the cost of a depreciable asset. One is that the initial cost of its acquisition, installation, and its commissioning. And the number two is the cost of any additions or improvement that we have done. On that particular asset. Now, what is useful life? Useful life is the period over which a depreciable asset will be expected to be used by the enterprise. This is an expectation or the number of production units. Useful life can be measured in terms of the period also, and it can be calculated in terms of or it can be looked at in terms of the number of the production units which are expected to be obtained from the use of the asset by the enterprise. Then how do we determine the useful life? It is a matter of estimation, and we normally estimate it on the basis of various factors, including our own experience with similar type of assets. Now, several other factors also, like estimated hours, like the renewals, all these things, affect the useful life of the asset, and therefore they need to also be taken into consideration while calculating the depreciation value or while calculating the useful life. Now, the third aspect is the residual value. So, to determine the residual value, it is normally a very difficult matter, because if you think that the value is insignificant then we can regard it as nil also. On the other hand, it is not to be said that residual value cannot be nil. If we think that it will be, we can treat it as nil. If the residual at the time of the acquisition or the installation itself, or we can do that at the time of subsequent revaluation of the asset. Whenever you make a revaluation of the asset at a subsequent time, perhaps when the asset is sold due to some reason, or if the business itself is sold due to some reason, or there is a change in the ownership of the business. So whenever a subsequent revaluation of the asset is made, at that time also, the residual value is estimated, and the residual value is also estimated when initially the property, plant or equipment is installed and commissioned. So finally, after having understood what are the three factors, the depreciable amount of a depreciable asset is its historical cost or any other amount which is substituted instead of historical cost if there was no cost, and from that we reduce the estimated residual value. So from the historical cost, when we reduce the estimated residual value, what we get is the depreciable amount, and then finally the depreciable amount has to be allocated to the years of useful life that has been estimated. Now let us take an example of a machinery which is purchased for 1,10,000 rupees, and we estimate at the time of purchasing the machinery that the residual value of that machinery will be 10,000 rupees. So, and we are also estimating that the useful life of that machine will be 5 years. So the estimate of the useful life is 5 years. The estimate of the residual value is 10,000 rupees, and therefore if you have to calculate the depreciable value or the cost which is to be allocated as depreciation in the various accounting periods, we will first take the acquisition cost as 1,10,000 rupees, and from the acquisition cost we will reduce the residual value 10,000 rupees, and after reducing this residual value, what we get is the depreciable amount, and this depreciable amount, for this depreciable amount, this is to be depreciated over the useful life, and the useful life of the asset is 5 years, so every year a depreciation of 20,000 rupees will be allowed in such a case. This is a normal way of understanding the allocation of every year, but of course we'll come to the various methods that are used for accounting for depreciation after some time. So important thing first of all is that we have to get to the acquisition cost of the property, plant or the equipment, because in order to find the depreciation we have to find the acquisition cost initially. So the cost includes the purchase price, including the non-refundable import duties it is paid, as well as the purchase taxes also, and from the total of the purchase price, the import duty taxes, we reduce the trade discounts and rebates that we have received, and once we reduce that, we get a certain cost, and of course the cost of the property, plant and equipment also comprises of any cost which is directly attributable to bring the asset to the location and to that condition which is necessary so that it becomes capable of being operated in a manner which is intended by the enterprise. So here we have to understand that we have to include the cost which is incurred or which is borne to bring the asset to that location, as well as the cost which is incurred to bring the asset to a condition which is necessary for it to become capable of being used in the manner which is intended by the enterprise. Not just capable of being used, but capable of being used in the manner intended by the enterprise. All those costs are also to be added to the cost of the property, plant and equipment which is to be depreciated. And the cost will also include the initial estimate of the cost of dismantling, removing the item and restoring the site on which the asset is located. Finally, when the asset becomes of no use, we need to dismantle it and remove it. So the dismantling cost or the removing cost of the item, so that the site can be restored to its original situation, that will also be included in the cost of the property, plant and equipment. So here we are in B, we have talked about the costs which are directly attributable to bring the asset to that location, not indirectly attributable. So we have to understand which are those costs which are directly attributable costs. And the costs which are directly attributable to bring the asset to the location and the condition are A. Number one is the cost of the employee benefits that arise directly from the acquisition or construction of an item of the property, plant and equipment. Cost of the employee benefits, cost of the site preparation, the cost of the initial delivery and handling of the equipment, cost of the installation and assembly of the equipment, cost of the testing if the asset is functioning properly, and after deducting the net proceeds from the selling the items produced while testing. The cost of testing is calculated by including the costs which are incurred for testing and after deducting the net proceeds from the selling of the items produced. Because when we test the cost, when we find out the cost of the testing of the machine, during the test also some item will be produced or manufactured. So when that item is produced or manufactured, we see the selling price of that item and we reduce that proceeds from the selling of the item, and thereby the original cost of testing will get reduced by the sales proceeds of the items produced while testing, such as whatever samples are produced while testing, those samples will be sold at the price at which they are sold, that will be reduced from the cost of the testing. And then of course the professional fees that engineers who are hired for helping in the installation of the machine, they will be paid some professional fees. So that is also a cost which is directly attributable to bring the asset to the location and the condition necessary. So therefore, all these are the costs which are directly attributable costs. Now all the expenses which are necessary for the asset to bring it in the condition and the location of desired use will become part of the cost of the asset. However, there are some expenses which should not become part of the cost of the asset. So we must be careful about what is not part of the cost of the asset. So let us see what are those expenses which are not part of the cost of the asset. A, cost of opening new facility or business, such as inauguration cost. So whatever inauguration costs are incurred that are not deemed to be, or they are not included in the cost of the assets which are to be depreciated. This has to be understood very clearly. that no inauguration cost has to be included in the cost of the asset. Then any cost which is incurred for introducing new product or service. For example, the cost of advertisement or the promotional activities, they will also be not included in the cost of the asset. Whatever advertisement is done or whatever promotional activity is done. As part of promotional activities, some samples may also be distributed of the new product or the service. All those things will not be included in the cost of the asset. Then, the third kind of costs which are not to be included as part of the cost of asset is cost of conducting the business in a new location or with a new class of customers. Supposing we have started conducting that business in a new location, or we have started a new class of customers to whom we have started selling the product. So any costs which are incurred for conducting the business in a new location or for any new class of customer will also not be included in the cost of the asset, and that includes cost of staff training. If we have incurred any cost for the training of the staff, that cost will also not be included as part of the cost of asset. So training costs are not part of cost of asset. And of course, the general administration and the general overhead costs, which are not directly attributable to the bringing of the asset to the condition which is required or to the location as per the requirement of the enterprise, will not be included as part of the cost of the asset. So having understood what are the elements which should be included as part of the cost of the asset and what are the elements which should not be considered as part of the cost of the asset. Now, once an asset has been brought to the intended condition and the location of use, now once that has happened, no cost should be recognized as part of the cost of asset unless we incur a major repair or major addition which actually increases the useful life of the asset. So if there is a expenditure incurred after the initial expenditure of or initial acquisition of the asset, if we do a major repair or a major addition which increases the useful life, then of course we can include that in the cost of the asset to be made depreciable. Or otherwise, if we incur any major repair or addition which improves the production capacity of the asset or increases the useful life of the asset, then we can say that a durable advantage has happened, and therefore we can say that a capital expenditure is being made, and therefore that cost should be depreciated over a period of time. Because we have seen that in case any expenditure is made for only 1 year duration, that would be treated as a revenue expenditure, and that could be debited straight away into the business expenses. But if there is a capital addition or a capital repair which increases the useful life or improves the production capacity of the asset, then that would be amortized or rather depreciated over a period of time. Now, accordingly, any cost which is incurred while the item is capable of operating in an intended manner, but it is not yet put to use or is used at less than full capacity, it should not be capitalized as part of the cost of the asset. So what we are saying is that once we have brought the asset to the condition as well as the location of use, after that we should not be recognizing any major repair, we should not be recognizing any other cost except a major repair or addition which increases the useful life or the production capacity, and any other small costs which are incurred thereafter should not be added to the cost of the asset. Just for the reason that, well, the cost is that so far the full capacity has not been realized, and it is not yet put to use. So for that reason, any expenditure that is made should not be added to the cost, because even if the item is not being used, it is at least brought to the condition and location. When it is brought to the condition and location, it is capable of being used, fine. That item has been acquired and the depreciable amount has been can be estimated, and any further expenditure which is made of even any small nature, not a major repair, that should not be accounted for in part of the cost of that asset, even if it is not put to use or put to use partly. Now, similarly, if you have to relocate the asset, cost of the relocation of an asset should also not be capitalized. And when we are not capitalizing it, means that we are not treating it as a capital expenditure, and therefore an uncapitalized cost will not be depreciated also. When we say it will not be depreciated, it will not be treated as part of the depreciable value of that asset on which depreciation should be allowed. So any cost of relocation of an asset should not be capitalized for the purpose of allowing depreciation. Now, any addition made to a particular item of the property, plant, or equipment after it is initially put to use are depreciated over the remaining useful life of the asset. Now, supposing we have purchased the property today, and then after some time we make an addition to the property, plant, and equipment, and once we make an addition, from that point of time, that part of the addition would be depreciated over the remaining useful life of the asset. So because by that time we'll have to recalculate the remaining useful life, because the asset has already been used for some time. And when we are making an addition to the property, plant, and equipment, the cost of the addition will need to be depreciated, but the cost of this addition will be depreciated only for the remaining useful life of the asset. Example is that, for example, we purchase an asset for initially, and then we think that its useful life is, let's say, 5 years, and then after 1 year we make an addition to the property, plant, and equipment, and we at that point of time, the addition that we make, that let's say that is costing us about 10 rupees. So what we'll do now is that we'll calculate the remaining useful life at that point of time, and let's say the remaining useful life of the asset has gone up, and now again it is 5 years from that point when that new property, plant, and equipment is purchased. So for the rupees 10 which is incurred as an expenditure, or which is incurred as the cost of the asset, of the addition of the asset, for that particular amount, that would be depreciated in the remaining useful life of the asset, which is calculated at that particular point of time when it is purchased or put to use. Therefore, it is important that we maintain an asset register in which we are having asset-wise details of the cost of the asset, the rate of depreciation that we are allowing, and the date when it was capitalized, because from the date it is capitalized, from that date depreciation would become available to it. And all these details would be mentioned in the asset register, and all these details need to be captured for whatever additions we are making in the existing assets. And there will be a very systematic in order to be able to allow depreciation in a proper manner. So in the absence of adequate information in the asset register, it will be very difficult to compute the depreciation expenditure year after year. Also, when we dispose of or discard any particular asset, we will not be able to compute the gain or loss on disposal or discarding of the asset if we do not maintain a proper asset register with the proper details. So having understood this as to how depreciation is to be calculated broadly on the cost minus the residual value and allocated over the useful life, and any addition which is made to the asset or the cost of the addition, that will be also depreciated over the remaining useful life of that asset. Now we come to the methods that are there for providing depreciation in the accounts. So generally, the methods that we are adopting for providing depreciation will be based on formula, and this formula is developed on a study of the behavior of the assets over a period of years for the purpose of readily computing the amount of depreciation suffered by different forms of the assets. So for different forms of the assets, on the basis of the study of the behavior of those assets, formula has been formally have been developed. Different formulas have been developed, formally have been developed to calculate the depreciation. So these formally are the methods of providing the depreciation in those cases. So each of the method, however, should only be applied only after carefully considering that what is the nature of the asset and what are the conditions under which that asset is being used. And on the basis of this consideration and the conditions under which it is, we should be able to find out the best method or the most suitable method that must be used to calculate the depreciation. Broadly speaking, there are these three methods of calculating depreciation. First is the straight line method, and the straight line method, it results in a constant or fixed depreciable amount every year over the useful life if the residual value does not change. So if the residual value does not change, the straight line method leads to a fixed charge of depreciation every year. Then there is a diminishing balance method in which there is a decreasing charge over the useful life. Every year, the charge of depreciation goes on becoming lesser and lesser and lesser based on the written down value of the asset. And the third method of the depreciation is the units of production method, which results in a charge which is based on the expected use or the expected output of the business. The income tax rules, however, have prescribed the diminishing balance method out of these three, except in case of those assets which are engaged in the undertaking which is engaged in the generation and distribution of power, for which diminishing balance may not be used. So now we'll discuss one after another each method of depreciation, and we'll take up the discussion on each method of depreciation one by one, and we'll continue this discussion in the part 2 of this webinar on depreciation accounting, which we'll take up in the today evening at 9 p.m. So please join us at 8:45 p.m. in the evening today for part 2 of the depreciation accounting. Thank you very much for having joined us in this morning session and for giving us the right encouragement to continue with these sessions. Thank you.